Welcome to the Blockchain Real Estate Podcast, sponsored by the Blockchain Real Estate Summit. Don't forget to mark your calendars for the Blockchain Real Estate Summit 2025, happening online from September 23rd through the 25th for our worldwide audience, with over 50 renowned real estate and blockchain experts and academics representing over 30 countries from around the world. Visit blockchainrealestatesummit.com for more information about the event and to subscribe to our newsletter for the latest updates on innovations in the blockchain and real estate sectors. That's blockchainrealestatesummit.com. Enjoy the show.
Hello, everybody. Welcome to the Blockchain Real Estate Summit podcast. I am Michael Flight, your host, and I've got a fantastic guest here today that I met recently at a crypto conference out in Salt Lake City. Was introduced by our old friend Lee Bratcher from the Texas Blockchain Council. And Lee just dragged this guy halfway across the conference center to say, you got to meet Michael Flight. Which is an honor to me, but we have Jullian Duran with MARA Holdings, and MARA is a publicly traded digital asset firm, which means that they're one of the largest Bitcoin miners in the world. And what they're trying to do is enlarge the Bitcoin ecosystem. So what Jullian is doing is the boots on the ground enlarging the Bitcoin ecosystem by creating and incubating all kinds of really cool side chains, really cool tokenization platforms and everything else. So with that, I would like to invite everybody. We've got the replay of Blockchain Real Estate Summit 2024. So head to blockchainrealestatesummit.com and sign up for our newsletter so that we can let you know when the next Blockchain Real Estate Summit is coming up in September 2025. So Jullian, why don't you just tell us a little bit about you, tell us a little bit about MARA and your adventures in crypto.
Absolutely. Thanks a lot for having me, Michael. My journey in crypto actually started out in Asia. I'm based in Dubai, began a fintech job in China and was leading their market expansion to Indonesia. It was around that time that I noticed that fintech and just finance, generally speaking, the emerging world is broken. I'm originally from Ecuador, so I knew that all along, but seeing it in practice and trying to build technology in a part of the world where local finance and local regulators aren't so amenable was difficult. And it was around that time that I came across blockchain, crypto, and I remember what originally got me into the whole ecosystem was the concept of a multi-signature wallet, which is just the most basic crypto primitive, but see, it's concepts like those that I talk to my finance friends about. I did a brief stint on, Bridgewater and some other financial firms in the U.S. I talked to my old finance friends about, and they're immediately, no way that exists as, a shared bank account, right? Like that only happens if you're married. And so,
Right.
and Marathon, what I do is I lead a number of our Web3 initiatives. We're building layer 2s on Bitcoin, but the real goal is to bring blockchain to the mainstream. And so I'm using my background in politics, my background in social impact work, combining that with fintech to create applications that I think are really going to make this technology more mainstream, because I think that's the biggest weakness of it today.
Fantastic. And we're here specifically because there's the Anduro ecosystem and there's a tokenization platform that you guys are really promoting. And we should probably, back up at some point and talk a little bit about what a layer 2 is and how all this fits in with Bitcoin. So why don't you tell us a little bit about what Anduro does and what you're doing there?
Sure. It's very simple. Bitcoin was a blockchain designed to be very sleek, very direct. It was very purposeful, very intentional, as opposed to Ethereum and other chains that have come since that are very complicated, have a lot of programmability. Bitcoin was built to really just be a simple payment layer, which then evolved to this digital gold hypothesis. Now, being simple means that you're resilient and you're secure, and Bitcoin is the most resilient and secure blockchain out there. But at the same time, it means that you can't accommodate all different types of applications. And so what Anduro is at a high level is its infrastructure built to extend the programmability, the utility, the usefulness of Bitcoin into new domains. Take, for example, tokenizing real estate. That's something that you could, in theory, hack away on Bitcoin main chain, but it would be very expensive and very inefficient. And so what the Anduro platform does is we create a network of side chains. You could call them layer 2s, you could call them infrastructure extensions of Bitcoin, but the whole idea is that it's software that accommodates new types of app builders and allows new types of applications to integrate Bitcoin more seamlessly. So that's Anduro.
Okay.
taking parts away.
Yeah, and to explain the side chains, and we won't get into that right now, but layer two, just like we are right now communicating over Zoom, and Zoom eventually is built on top of the ground layer, which is TCP/IP. Nobody knows what TCP/IP is. Bitcoin, as you said, was originally kind of a payments layer, but we, like to say here, it's a value transfer network, so if you think about it like, oh, it's the plumbing, like the phone lines and everything else, and the TCP/IP is the protocol that's running it. Well, the Bitcoin is the plumbing for the value transfer. And so what you're doing is building on top of that, so actual value could be locked on top of that, and we can get to tokenized real estate. And so you over in Dubai and me in the United States could transfer, fractions of real estate. Whether I wanted to buy, a piece of a deal you've got in Dubai, or we both decided to do something in South Africa. So does that describe it pretty closely?
Perfectly.
Yeah.
Yes.
All right. So why don't you tell us a little bit about why a Bitcoin miner, and I'll just refer to it as a Bitcoin miner because that's what you guys, I know you're evolving and, now you're digital assets, but why would a Bitcoin miner be interested in putting real estate on the Bitcoin? Because I'm going to just say something very political. I told you I wasn't going to be political, but there's these Bitcoin maxis out there that say that Bitcoin is only digital gold and we shouldn't mess around with anything and put NFTs or anything else on it. So why would a Bitcoin miner be interested in getting real estate and other fantastic value propositions onto the Bitcoin blockchain?
It's simple. The Bitcoin blockchain is secure because of proof of work. Proof of work is the consensus mechanism by which the ledger of Bitcoin is appended and managed. And in exchange for managing that ledger, for keeping the records, for being miners, right? That's what Bitcoin mining is all about. You're maintaining the Bitcoin ledger. In exchange for that, you receive fees. And Bitcoin fees, transaction fees, have been pretty low for a very long time. For most of Bitcoin's history, that hasn't been a problem because there's this other bit that when you win a Bitcoin block called the block reward, where you make the vast majority of your earnings. But Satoshi programmed into the protocol every 4 years that block reward halves. It's an event called halvening, and the last halvening happened this past May. And so from a Bitcoin miner's perspective, the single biggest risk to Bitcoin is the fact that that block reward is happening and you don't have enough transaction fees to maintain the profit motives behind Bitcoin. Now, for those listening who maybe have not, been part of Bitcoin's full history, which is fine, a lot of us haven't, the only thing that Bitcoin, the innovation that Bitcoin really provided wasn't a particular piece of technology. It was a mechanism of consensus. It was a social consensus mechanism, right? That's the innovation behind Bitcoin. You have these nodes, these computers in all parts of the world that are working together to create this network, and they're only motivated to do so based on profits, right? It's actually it's a capitalist network. The whole idea is that you're incentivized via these transaction fees. And so the more that we can use the Bitcoin ledger, as you said, as a value transfer layer, the more value we can stack into that layer, the more demand there is for Bitcoin block space, the more demand there is for Bitcoin mining, the greater the transaction fees are. Now, to your point about the maxis, because this is actually really important, and it kind of goes back to why we designed our layer 2, why we designed Anduro in the way we did. We agree. We don't think that you should tinker around with Bitcoin's main chain unscrupulously. In fact, what has kept Bitcoin so resilient versus other chains is the fact that it's so stuck in its way, so difficult to co-opt, so difficult to usurp in any sort of way, that is what has made it, so long lasting, right? That, unhackable, et cetera, et cetera. The way we architected Anduro is all of these new functionalities, tokenized real estate, tokenized whiskey, cross-border payments, whatever use case, we're not actually changing anything on Bitcoin's main chain. Bitcoin's main chain stays exactly the same. Anduro is simply a side chain. It's a layer 2 that connects and posts data to Bitcoin. It uses the Bitcoin asset, lowercase b Bitcoin, but it doesn't have to change anything about how the Bitcoin network operates. And so you could consider it as an appendage, right? You have the Bitcoin network and we've just added something on top of it that isn't affecting anything on the base layer, has no impact on the maxis. basically, if you want to use Anduro, if you want to tokenize your real estate, you can do that. If you never want to hear about those use cases and you don't want to be impacted by them, you can also do that. We designed it so that it's an opt-in system as opposed to something that actually damages or puts at risk, underlying Bitcoin holdings. Look, at the end of the day, we hold 26,000 Bitcoin on the balance sheet. Of course, we're going to be very cautious about what we're doing to the main chain. We're stewards of the ecosystem, and that, we don't have any plans to change that.
Right. And let's dig down a little bit, because I think that the biggest confusion, well, at least with me initially, with blockchains and with layer twos and how they all fit together. Basically, you're building something on top of the Bitcoin blockchain that interacts with the Bitcoin blockchain, and you're using Bitcoin as your record keeping thing, so that it kind of like, you do all the transactions on the top, and then it bundles up all those transactions and locks them in the Bitcoin blockchain so that there's a record of those transactions. Is that a better way for me to understand it?
That's one part of it. The other part that we do, which is different from everybody else in the space, is the layer two we've built. The asset that you use to transact, to pay for transaction fees, is actually Bitcoin denominated. So what we're doing is we're using consensus from Bitcoin. Mining that goes into Bitcoin goes into mining Anduro. There's also the part of data, which you're talking about, you're correctly alluding to, that we're posting data to Bitcoin after it's done in this layer two. But the third part is we're actually using the Bitcoin asset, a wrapped version of it, a bridged version of it, on the layer two itself, again, adding more to those profit incentives of Bitcoin. So a world in which Anduro is successful, in which our layer two is successful, you see more activity on the Bitcoin main chain, and you see a higher price in Bitcoin itself because there's more demand for using it.
Well, and you see more assets denominated at some point than in Bitcoin too, so that, Bitcoin, instead of like saying, well, Bitcoin is, $68,000, Bitcoin is its own denomination. You'll be able to divide in Bitcoin at some point.
That's 100% right.
Okay. All right. So let's talk a little bit about some of the things that Anduro is doing to, make things really cool in the world of finance and in the world of Bitcoin.
Absolutely. So I would say, going back to a little bit of the history lesson, we started with this ambition to extend Bitcoin's utility and try to drive toward new use cases. Obviously, that was a very difficult task because the Bitcoin ecosystem hasn't always been so experimentation forward. In fact, there were a lot of different political wars that I would argue, really got the ecosystem stuck for a while. And one of the biggest priorities I had for this year was, we're a miner with a big balance sheet. We can incubate any app under the sun. Let's do it. And so we incubated a job listing platform, a cross-border payments app, a restaurant loyalty application, a celebrity loyalty app, a number of different use cases. And one of the one that I think was the most successful, all of them were a varying degree of success, but the one that we're really choosing to focus on now is a real-world asset tokenization platform. And so the idea there was simple. At the end of the day, Bitcoin is, as you said, a data layer. It's a value transfer layer. And it's $1 trillion value transfer layer. So it only stands to reason that $1 trillion assets should live on $1 trillion blockchain. And so what I believe is Bitcoin is uniquely suited to handle that sort of demand, that sort of those sort of applications. And what we're finding is we built this platform Avant. The market is taking up to it. A lot of people have been talking about it on Twitter. An executive team is pretty excited about it. Our whiskey partner is pretty excited, and we have a pipeline of other issuance opportunities that are now coming on board. But the whole idea behind it is, let's tokenize real assets on Bitcoin. Real estate is, of course, a massive priority, and it's something that is personally very interesting to me. But the goal is to tokenize as many things as possible and to, again, create that network of buyers, of interested parties, of issuers, and really create a marketplace on blockchain that, makes capital markets easier to navigate.
Very nice. Very nice. I've got a double question here.
Sure.
I want to learn a little bit more about the whiskey fund, but is one of the things you incubated an actual tokenization platform, or do you have other people building tokenization platforms on your system? And then let's get a little bit more into what you did with the whiskey fund.
Sure. Yeah, the tokenization platform is ours, but as you know better than I do, tokenization the end-to-end workflow of a tokenization pilot of any tokenization effort has a lot of moving pieces. So we didn't recreate AML KYC. We didn't go out and get a transfer agent license. All of those are things that we have a provider helping us with, 2 providers to be exact. But in terms of the actual front end, the marketplace, the posting of data, the minting of different tokens, all of that is handled by us and by our layer 2 sidechain called Alice. So I would say it's a hybrid platform, but that's how tokenization engines are built. Our roadmap is now that we've incubated, we have a proof of concept, we're doing this pilot. A successful whiskey pilot is a world in which we really double down and think, all right, what part of this value chain do we really want to focus on? I think there are so many different players in security tokens in the security token marketplace. And as much as possible, we don't want to cannibalize. We want to be additive. And so that's really the goal, is focus on our niche. And I think our niche at the moment feels like there's a Bitcoin element to it. We're really great at bringing enterprise issuers, enterprise buyers to the table. I think the Bitcoin mining element is an important one. We can unlock Bitcoin liquidity unlike anybody else in the market. And frankly, that's really the only chain that has pretty robust global organic demand. It's Bitcoin, right? So if we find a way to unlock that demand, which I'm not trying to say is easy, and anybody's done it successfully, it's very difficult to convince a Bitcoiner to invest in something. However, I think we're going to be successful at it, given that we are big Bitcoin holders. We're big Bitcoin owners. We're Bitcoin enthusiasts.
Yeah, and what I like to explain to Bitcoiners is that there is no native yield on Bitcoin. So and you need real estate to even create Bitcoin. And so
Yes.
so you can get yield from real estate, and you can dollar cost average into even more Bitcoin. So we can convince them to do that, instead of like taking a, utopian type of a thing and making Bitcoin into a religion. Hey, let's make it useful. So that's what we're all about here.
That's
Number
100%.
2.
Yeah, me too.
Yeah. And then the next thing I wanted to ask is, if I wanted to create a tokenization platform of my own, could I white label your, product and, issue stuff and use your technology?
In its current form, no, but that's definitely on the roadmap. It would take a little bit more of a tech lift, not much of one, but that's something that we want to enable. Ultimately, we want to be the tech provider in this entire equation. Marathon, parent company Marathon might, maybe it finds some of these deals exciting, right? From a treasury standpoint, maybe there's some way to diversify our holdings. That could be the same for other miners. But really the goal for my team is, let's build technology that creates this two-sided marketplace. It doesn't only have to be our marketplace, and it could be that we provide that for third parties to go out and tokenize themselves. All of that is within scope. But yeah, for this first pilot, we decided to make it, what do they call it? It's super simple, right? As simple as possible. Let's tokenize whiskey. Let's prove the model. Let's go out and build some more.
Well, and get an MVP out of it, a minimum viable product, and, prove the concept. And then it's like, hey, let's run with this. And then, if you get it big enough and grow it big enough and other people come in, it's a much better marketplace for everybody, because there's more liquidity and all the rest of it.
That's exactly right.
Yeah. So give me a little bit of information, because I'm a whiskey drinker. So I'd like to know, what kind of whiskey is it? Is it a bourbon? Is it a Scotch? Is it an Irish whiskey? And where did you issue it, and what domicile?
Yeah, so it's a Kentucky bourbon, domiciled in Kentucky. The story behind the issuance is, one of our executives in Marathon, next door neighbor, is actually the legal counsel for an investment company in Kentucky that is investing in whiskey barrels. It's run by 2 guys that have been in the distillery business for a very long time. They're experts in Kentucky, based out of Louisville. And yeah, the long story short is, they have been raising, they've been creating these securities, Reg D exempted 506Bs. They raised, I think, for about 1,100 barrels. It was a fine process. It was very successful, but they're really looking for scale. And I think that, one of the two distillery partners is actually a former Bitcoiner. Found that out recently, actually, in Salt Lake. We met up in person, and he was talking a little bit about his history. But it was interesting because, it turns out he's a longtime Bitcoiner, kind of got out of the game a bit. We approached him from a warm lead, and, he was like, well, okay, NASDAQ company wants to get in on RWAs, and I have an interesting RWA. Let's work together and let's do it. And so, yeah, it's bourbon out of Kentucky. Aged. The intention is to age these barrels for 8 years, so 7 years left. And these guys have the capacity to be able to buy way more barrels. We're talking like they're right now on the scale of 1,000. They could easily do 5,000 a year. But really, that's the problem, is that Kentucky bourbon is a somewhat illiquid market. It's an interesting market, but it's fairly illiquid. And so our thesis is that with tokenization, we can make it more liquid if we enable secondary trading, new types of utility for those whiskey tokens. And I think most importantly, there's that digital forward aspect to it all, right? The process by which one would become a bourbon owner, a bourbon barrel owner, is very manual. You have to go through banks, phone calls, etc. We create this digital first platform that allows you to do it from your couch even.
Yeah, you're getting rid of a lot of the paperwork, and you're making bourbon liquid in 2 different ways.
Correct. Yeah. That's a good way of putting it. We actually have a marketing post that we're about to release that, similar play on the word spirits and liquid, making whiskey liquid.
What other type of assets have you seen interest, for your product, and also what other assets are on your roadmap?
So tons, honestly. I think I'm at the stage where we really have to think, all right, what makes sense as part of the story? We have a Mexican art dealer. We have a Californian mineral mine. We have, what else? There's a wind farm, right? Like there's, real estate equity fund out in Europe. There's a number of different like pipeline issuance opportunities. It's a matter of which one do we want to capitalize on first. If you ask me, I think my mind is really international, just given the experience of tokenizing these whiskey barrels. Nothing short of a pleasure working with the whiskey distillery company, but the legal aspect to it all and the SEC restrictions, they've been challenging, right? And, I get the reason why they're there, right? Government thinks that they're protecting individuals and, power to them, but I think there are other jurisdictions where this process could be made a lot easier. The question is creating that marketplace. So yeah, we have other pipeline opportunities. I think total, they sum to in the hundreds of millions. I think it's actually over 500 million in potential opportunities, but I really want to focus. I'm a big believer in, I think the tokenization space, they're enamored with these, eye-watering issuance pilots, these eye-watering issuing numbers. And then there's no trading, right? So my biggest focus is I want a product that's traded. I want tokens that actually have utility. And I want to be sure that the users are actually happy with what we're putting out there. I don't want it to just be a marketing play. I mean, look, at the end of the day, I work for a big company. MARA is not interested in this for a marketing stunt. It's looking for revenue, right? So if we're not able to generate revenue and we're not able to show it in a concrete set of use cases, it doesn't make sense pursuing. So I really want to be deliberate about which issuance opportunities we take, make sure we're dealing with and we're working with the best. And ideally that we work with assets that are liquid, that are somewhat liquid, right? That are difficult to access via traditional capital markets, but that also have a buyer base that we can easily tap into. I mean, whiskey barrels, as an example, plenty of bourbon drinkers, plenty of bourbon aficionados. Right. It's much easier to go out and engage, right? So the buy side is really where I spend most of my time deliberating and thinking about.
Yeah, and I'm going to warn you, like I've warned everybody, my experience, since 2019 is that will you get some liquidity? I do believe you will get some liquidity. So like, for example, we do, institutional real estate, and it's syndicated and it's all on paper. And I don't think there's going to be a gigantic secondary market for it, but it is going to create a lot more liquidity than we have right now. And I always tell the story about my father invested in a hotel deal, a syndication, I think it was around 1981 or so, and then he passed away. And so my mom was stuck with this thing for more than 40 years. It was just a horrible deal. But she couldn't get out of it because it's like, oh, well, we're just going to sit on this and collect the management fees and everything else. So with the tokenization, it gives you a lot more options. You can potentially trade your shares, or what's not available right now is there's not a real big market for borrowing against your shares. Yeah. So if you tokenize those, and what I love about the crypto market, and I try to tell people that the tokenized real estate is not the crypto market. but the crypto market has put together things where you could get leverage against your shares in a lot better fashion than you can right now, with the paper shares. So that's really been, the crypto market and the guys that are working in that field have really opened up financial technology to the point where, you see PayPal and all the rest of these people incorporating a lot of the stuff that was invented, for crypto markets. So I do think that you've got more opportunity to do a lot of things. Are you guys?
I agree.
Are you guys creating a secondary marketplace too in your ecosystem then?
Definitely on the roadmap. Obviously, some regulatory issues there to sort, and providers to get on hold. But to your point about buyers, I'm under no delusions that it's going to be difficult, and I have a number of different ideas of how we can be different in that regard. I think with most of these tokenization platforms, if there is a secondary market, the utility is buy and hold. Buy, hold, connect your MetaMask, have the token in your MetaMask, go out and do DeFi wherever it's accepted. But see, that's the problem with Web3 is we don't hold the user's hand enough, and we expect them just to get it all of a sudden. And anybody who's used different DeFi platforms, even the best, Aave, Compound, Curve, whatever you want to call them, but whatever platform you want to, I've used them. It's very difficult to get your head around what exactly you're doing. And a lot of the experiences feels gimmicky, and they feel like you're about to get your money stolen. And so I think the real unlock here is a product, it needs to be an innovative product. And so the way we're thinking about secondary marketplaces is you're absolutely right. Crypto markets have opened incredible new sorts of financial primitives. It's what got me into the ecosystem in the first place. Multi-signature wallets are one example of that. Now, I think what's missing is things like AMM pools, automated market makers, liquidity pools, borrow lend protocols. It's not intuitive enough, and it's not seamless of an experience enough for somebody to just dabble in. And so part of the vision I have for Avant is right now it's a primary issuance and it's a buy-sell platform. The first secondary market we release is probably going to be the same. But really where I see this going in the next quarter is we want to unleash a product that is unique in the sorts of secondary utility that an investor can find, where somebody can, in other words, use the primitives that you are familiar with in the crypto world, but use them in a way without the crypto jargon and without the crypto user experience, in a way that's very seamless and makes a lot of sense, so that you can, as an example, collateralize your whiskey barrel tokens to get a loan out in, let's say, BTC that you then go on and do whatever you want. In fact, this conversation reminds me, this past summer I was in Bitcoin Prague and I met a real estate developer whose entire business model was basically leveraging his real estate to buy Bitcoin. Right? It was a very MicroStrategy-esque approach. You could theoretically do that with these whiskey barrels, and we can enable those sort of primitives from the get-go, which right now in Bitcoin, you have to go to all these different borrow lend protocols. You got to go talk with the founders to integrate the token. My wallet doesn't work. The wallet doesn't show. Things are non-custodial. The Lazarus group. We want to eliminate all of that.
Yeah, that's what I wanted to say. You said it's going to be difficult. I don't want you to say it's going to be difficult. I think it just needs to be made easy. And, and I meet too many people in technology that they're enamored with how cool the technology is. And I like to back it up and say, most people just want to sign on with an email. They want to sign on with their Apple ID. They want to sign on with their Google ID. They want to put their thumbprint in, or whatever. And they don't want to have to remember, in a 9, word seed phrase. And they don't want to have to say, oh, if I lose this, I could lose everything. So that was so I think it's more of I don't think it's going to be difficult. I think we need to do better education.
Yes, I agree. That's a big part of it.
And we need better user interface so that somebody's not just staring at a black screen, with stuff blinking on it. I have a dashboard. I own this. I own, 5 whiskey barrels here. I own a piece of, an apartment complex in Dubai. I own, this over here in Europe. And then I want to just trade some of these, and it's all on a dashboard, and it's much more intuitive and easy to figure out. And I always like to say it would look like my Vanguard account. I don't have, it's a little bit, tough to figure out the Vanguard account, but it's not as tough as, and the other thing is it should all be put together so that you shouldn't have to go to 5 different things. It's like, if I want to go out to here, there's, I'm going to, get technical, but there's an API and it just goes out to there and nobody knows it because like, with Zoom, all I got to do is sign up with my email, and create an account and click on that link. And here we are. You're in Dubai. I'm in Chicago. Everybody's happy and we're learning stuff.
Exactly. I think look, even something simple like Zoom. What was a big success by it is that Skype, you had to create an account to join a meeting. Zoom, you didn't have to. And I come across so many, look, today alone, I came across 3 new tokenization platforms. I go on their website and within the first 10 seconds, I still couldn't figure out what the return or what was the investment or what are the details. Simple things that, okay, I get you're trying to be compliant, but you have to show the user what you're offering them. You can't hide it behind a paywall just because you want their email to market and, talk up to your VC firms that you have users. That's not how things work. And so I think it's a lot of like,
well, I'm correct you on that because in the United States, if it's not the proper type of, thing, you can't advertise those. So, and then the problem is here in the United States. So I agree with you. I think all the opportunities right now are outside the United States because it's really difficult unless you're an accredited investor, or you're marketing to accredited investors to do this. Because if you do like put some of those yields out there, the SEC, instead of going after actual frauds like Madoff, will come knocking at your little, thing and say, just give me a settlement.
Exactly. Right. No, you're 100% right about that. I guess what I'm talking about is maybe even walking through a little bit more of the user journey as opposed to like the terminology of we're democratizing capital markets, yada, yada, yada. And it's like, okay, well, I mean, what? What am I looking at here?
We're democratizing capital markets, but you have to be an accredited investor and have, $1 million liquid assets. But, it's close to democracy.
Yeah, getting there. Greek style democracy. What is it? Athenian democracy.
Plutocracy. But yeah, so I'm really excited about what you're doing. I'm now going to ask you the tricky questions because I have been telling people over and over again that are like trying to tokenize on these obscure chains that nobody knows about, but it's like, oh, well, they're going to give us a, $50,000 grant to set up our tokenization platform. But it's like, well, there's no community on those chains and nobody knows about them and there's no interoperability. And so then if you have to transfer off of that chain, there's these weird bridges where people can come in and steal everything.
Yeah.
So I always tell people, look for an EVM compatible chain, which is Ethereum virtual machine. Are you guys EVM compatible?
Yes. Yeah. We have multiple side chains, and the one that we're building the tokenization platform on top of, EVM compatible, supports every single Ethereum smart contract.
Okay. And so if I were to take our triple net fund, the Liberty Fund, and issue again through, on your thing, I could set that up so then it could trade on the multiple markets because it's EVM compatible and it wouldn't have to like do all this stuff called bridging and things like that, correct?
So there would still be bridging if you wanted to, for example, go between our EVM compatible chain and let's say Optimism. They are technically 2 different chains. And so you would still have to go through some bridging mechanics there. But I don't think that's necessarily the big problem in the early days. I think bridging, I mean, there's been a lot of innovations in the past 2 years alone. I mean, one of the biggest bridge hacks was Wormhole a few years ago, and the team has been working tirelessly to make their platform so much more resilient. So I think bridging is going to get there. That being said, I really think the liquidity that I'm after isn't really so much on these other chains as much as it is on Bitcoin. And the bridging challenge with Bitcoin isn't even just a technology problem. It's a psychological one. It's Bitcoiners don't like to put their Bitcoin on other chains. And so if we can find a way to build a layer 2 that is Bitcoin native enough, which we have, and if we use our Bitcoin credentials or miner credentials to the greatest extent possible, which we are, I think we're going to be able to unlock that liquidity to justify better bridging technologies to Bitcoin itself. So in many ways, I'd say I want to flip this, liquidity question on its head where, yes, there's more RWA liquidity in other marketplaces, but if we unlocked a fraction of Bitcoin's market cap onto DeFi, it would dwarf every other DeFi network in a matter of a day, right? If we could unlock that, in a matter of a day, it would do so. So that's
Right.
kind of
Let's go back to my other statement, community. The world's largest, community is Bitcoin in terms of
yeah.
financial community.
And they're
So
not activated. That's the thing. I mean, look, I was chatting with BlackRock earlier this week about it, and a guy from their team mentioned, hey, but there's no evidence that these Bitcoin hodlers are going to get into RWAs. Not to mention, they like their meteoric Bitcoin yields. How are you going to convince them to get into a more stabler asset? Well, the thing is, a lot of Bitcoin holders are institutions, and if you're an institution, or even if you're a more sophisticated trader, you're going to want to diversify your portfolio. And the thing about Bitcoiners is they don't want to diversify their portfolio into know-nothing chains that are potentially risky. And so if we can position this as a diversification product for these Bitcoin holders, for miners, I think it has a chance of succeeding. But we'll see. Proof is in the devil's in the details.
And you say, Bitcoin's meteoric rise, Bitcoin's meteoric return, you only get that return if you sell it. So
Correct.
if you can invest that into something that gives you cash flow, you could live off of the cash flow, and you could also still have the increase in the Bitcoin. And as I said before, I have preached this over and over again. If you've got something that's giving you $500 a month or $1,000 a month, and you take even a portion of that and dollar cost average it back into Bitcoin, no matter what Bitcoin is doing and it's yo-yoing up and down, you would be much further ahead, just doing that over the past 4 or 5 years. And, we've got the documentation to show how to do that.
Yeah. No, it's 100% true.
Yeah. So, is there anything else that you wanted to cover? Because, how do people get in touch with, you, the team, and some of the products that they could talk to you about?
Absolutely. So the tokenization platform, you can find more info on it on avantfinance.io. So Avant, AVANT, finance, FINANCE.io. We're also on Twitter, but our Twitter is mainly under the Anduro brand. It's the layer 2 ecosystem. So that's Anduro BTC. Email inquiries, anduro@mara.com. Anduro spelled AND as in David, URO. And yeah, my name's Jullian. On Twitter quite a bit. My X profile is entirely my Bitcoin persona. I've basically channeled all of my work into there. But yeah, our team, we frequent all of these different events. I mean, if any of your, any listeners are at or going to an RWA event, chances are me or somebody on my team is there, out there pitching and kind of getting a sense for what's going on in the ecosystem. But yeah, I think, online form there for inquiries, email for anything else. And yeah, happy to connect with really anybody. This ecosystem grows if we think of it additively. And I think that, no need to be, scrappy competitive. It's really just a matter of adding, one-upping everybody who's trying to do something in the space. So, we have a fund and we're willing to invest and back really great builders. If you're out there and, you want to help us build this Bitcoin RWA vision, we're here to support.
Yeah, you can hoard a small pie, or you could get, a much larger slice of a larger pie. So,
and, that's the whole promise of blockchain, right? It's the public blockchains, at least. It's create an ecosystem, create a community. There's so many ecosystem directors and ecosystem yada yada position titles, but so few of these blockchains, they just think of it that way, right? It's my ecosystem, my group, my token incentives, and sad that it's that way. So we're hoping to change that.
And I also want to point out, you guys have, I believe it's on Anduro.io, a great white paper that kind of simplifies some of the things you're doing. It's got some diagrams on, how the parts fit together. And it's something that somebody that's non-technical like myself can read and kind of understand what's going on, and, and how things fit together.
That's right. Yeah. The funny thing about that white paper, I wrote it about, I guess, a year and a half ago. Still rings true. It's actually the one foundational document for any startup I've ever led that has remained largely consistent. In fact, I think even there, I talked about this idea of bringing RWAs to Bitcoin, and look where we are now. So it's, yeah, definitely a good place to start.
Well, Jullian, I really appreciate your time. We learned a ton from what you guys are doing, and I'm super excited about trying to do stuff. I, have been trying to find, and there's a few other, competitive Bitcoin blockchains out there, but they're just difficult to work with because, as I said before, there's not a whole lot of organization. So it's like, how do you find that person to then like start issuing or doing anything or interacting with the Bitcoin blockchain other than buying Bitcoin and holding it and trading it?
Right.
So we're really excited about this because it's, as you said, Bitcoin has been proven to be the most secure network in the world. Bitcoin wasn't necessarily the first blockchain, but it was the first one that figured out how all the pieces put together. And the thing I really like about Bitcoin is somebody like knew a lot about philosophy, somebody knew a lot about incentive systems, and somebody knew a lot about economics, that they designed something that works pretty well. And since I'm from the United States, the original founders figured out that you had to have competing interests that didn't have control all over one thing. But those competing interests, if they work together, things move forward and things run much more smoothly. And also freedom. I really like the idea of Bitcoin as freedom.
I never thought of that. Yeah, you could say decentralized, distributed public ledgers are similar to the checks and balances system. I hadn't thought of that analogy, but yeah, that's a good one.
Yeah, no, and it's like, because if you like take a look back at like all the things that like maybe having a king works pretty good in some situations, but it doesn't work good in other situations. So maybe if we make somebody kind of a king, but that's why I said, I didn't really understand Bitcoin at first, and I tell everybody this because I don't really do math. But when I figured out the elegance of it and just ignored the math part of it and figured out, the checks and balances and the incentive system, I'm like, I don't need to know the math. I don't really need to know how to write the code for it.
Right.
I can see how the incentive system works, and this is like brilliantly designed.
Exactly. Yeah, I completely agree.
Yeah. Well, we really do appreciate your time. We really appreciate you coming out here and, preaching all about, how you're going to expand the Bitcoin ecosystem. We want to remind everybody that if they want a replay of the Blockchain Real Estate Summit, they can go to the blockchainrealestatesummit.com website and, purchase the replay. We've got extra bonuses in there. We're going to be throwing more bonuses in. But if you want to know anything about real estate on blockchain, real estate and blockchain ecosystems, and actually how you can work through and figure out actually how to do, any one of these issuances, it's going to get much more easier the more education we get out there. And as always, this is not financial advice. This is not legal advice. This is not accounting advice. So you should always check with your professionals and confirm everything with them. With that, I appreciate everybody from showing up, and we're signing off.
Thank you for tuning in to the Blockchain Real Estate Podcast, brought to you by the Blockchain Real Estate Summit. Don't forget to mark your calendars for the Blockchain Real Estate Summit 2025, happening September 23rd to the 25th, online for our global audience. Secure your tickets today at blockchainrealestatesummit.com/registration. If you enjoyed today's episode, please follow the Blockchain Real Estate Podcast on your favorite platform and leave us a review. Your feedback helps boost our visibility and allows us to reach more listeners like you. Have a guest in mind you'd like us to interview? Let us know by leaving a comment at blockchainrealestatesummit.com. Thanks again for listening, and we'll see you at the summit.
Adam Carswell, the voice of liberty. This podcast is solely intended for informational and entertainment purposes only and is not intended to provide tax, legal, investment, or accounting advice. You should consult your own tax, legal, accounting, or investment advisors before engaging in any transaction or undertaking. Thank you for listening to the Blockchain Real Estate Podcast, which is a part of the Blockchain Real Estate Summit Network. Go to blockchainrealestatesummit.com for more information, free reports, and giveaways with free stuff. Thank you.